Hey, Year 11. So today what we're doing is we are going to take a step back into the realm of cash, and we're looking at a pretty similar statement to what we've already looked at. This is one of our big reports, like our balance sheet, and it's going to seem kind of familiar to you. So we have looked at a statement of receipts and payments before, which is looking at all the cash that flows into the business and flows out of the business. And that's pretty similar to what we are looking at today, but what we're going to be focusing on is called the cash flow statement. So the cash flow statement still looks at all the inflows and outflows of cash from business, but what it's really focusing on is where these cash flows are coming from. So it breaks it down into a few different categories that can give the business a little bit more information than what a statement of receipts and payments would do. So this slideshow will go through, break down each of the three categories, and show you what each section will look like. So as a bit of a heads up, we have the operating activities, we have the investing activities, and we have the financing activities. These are three really big categories. Basically, we're looking at day-to-day stuff, we are looking at buying and selling non-current assets, and we are looking at capital and loans. So let's jump in and see where it all comes from. So as I said, today we're going to look at cash flow statements, and they're really similar to the idea of our statement of receipts and payments. But the statement of receipts and payments is pretty limited in terms of the information that it can tell business owners and managers and things like that. It really only tells us the amount of money coming in. It doesn't tell us where the money is particularly coming from. And as a result, it can be hard to kind of judge how a business is performing. But by splitting it into three different areas, which, as I said, was our operations, our financing, and our investing, it gives us a little bit more information. So let's look a little bit more closely at these classifications. So, as I said, operating, investing, and financing. These three areas are really key functions for the business. Starting with our operating activities are our day-to-day. So if we're not getting any cash flowing into the business from this area, clearly we're going to be struggling. You can't keep a business afloat just by taking on loans and injecting more cash into the business as the owner. You need to make sure that your business is actually bringing in sales, things like that. As a result, our operating activities includes our cash sales, receipts from accounts receivable, the GST that we receive, things like that. And our outflows include our cash purchases, payments that we make to accounts payable, wages, advertising, and the GST we pay. These are very much everyday things. And I'll just note, it also includes interest. Now, interest might seem like it's something that's got to do with loans and banking and stuff, so therefore it should be part of financing. But the way that we account for interest is that it is the cost of borrowing the money. And interacting with banks is seen as more of a day-to-day thing. So because it's not a direct cost of the loan itself, it's actually a cost of interacting with the bank. For that reason, we also count that as part of operations. Now, looking at investing, as I said before, investing is buying and selling non-current assets. So when we sell assets, whether it's a vehicle or equipment, things like that, we're going to end up with cash inflows. And when we purchase new assets, we're going to have cash outflows. Finally, as I said, financing activities. So these are all the inflows and outflows that come from changing the financial structure of the business. And by that, I mean taking on loans, so increasing our liabilities, or injecting more cash into the business, so therefore increasing our owner's equity. It could also be withdrawing cash as the owner, or paying back loans, things like that. These change the financial structure of the business. Now, once again, just noting, interest is not part of this. Interest is actually part of the operating activities. So, pardon me, in terms of what this looks like, the format of the operating activities, the way that we structure it is we break it into almost 3 mini reports. So, when we have our cash flows, all the cash flows coming in are seen as positive numbers, and all the flows coming out we put in brackets. So our cash flows from operating activities would look like this. We've got cash sales of $40,000. We have GST received of $4,000. But then we've paid wages of $10,000. We've paid advertising and we've paid GST, which means that the net cash provided from operating activities is $28,000. Sorry, $28,500. So just keeping in mind, all of our outflows are in brackets. So we can see from this report, we've made $28,500 just from our operating activities. Now, that is going to help us fund other areas of the business, like purchasing new assets. So we start to look at investing activities. Here, we've sold some office furniture and we've purchased some new office furniture. So all in all, we have made net outflows of $4,000, but this isn't necessarily a bad thing. We've reinvested into the business. So this $4,000 loss of cash does mean that we've increased our assets. So it's not necessarily a bad thing for the business because we have new assets that we can work with and that we can actually make money with. Finally, we have our financing activities. So you can see we've got a loan from National Bank. We have a capital injection that we've made, but we've also made a loan repayment and we've got $15,000 of cash drawings. So here we have a net increase in our cash flows of $10,000. So what we do now is we take these 3 mini statements, having determined our net figure, and we say overall our net increase or decrease. In this case, it would be a net increase of $34,500. We state our balance at the start of the period and our balance at the end of the period. So now what I'll do is we'll wrap this video up and I'll leave you with the questions that we need to do for chapter 11, and also I'll leave you with a bit of a meme. Thanks. So as you can see, cash flows are a nice way that we can extend the reports that we currently have, like our statement of receipts and payments, and start to provide more information for the owner. You can see that when we break down where we're getting cash flows from, we can understand why some outflows of cash are totally fine, particularly with things like investing. And you can see why businesses that, even though they might have positive cash flows, might still be in trouble because the operations themselves aren't making money. So it's a chance to really start to drill down and analyze a business, which is something that you'll have a chance to do in this chapter. So have a shot at the questions that I've set for you. And yeah, otherwise I think you guys will be just fine. Have a great night. Thanks. Bye.
Hey dude, I made this pretty cool meme. I wanted to show it to you.
Oh, that's so funny. How'd you make it?
Well, you see, first I added this really colorful background, and then this really funny cartoon of a salamander, and then this text, ask for a water cup and fill it with soda. I call it Sneaky Salamander. Oh, you want to know how to make a fresh meme? Well, let me show you. First, you take an oversaturated hallway, fill it with shadow demons, and then add some text like, me and the boys at 2 a.m. looking for beats!